Hey there traders, it's Jeff from thestockbandit.com, and I'm glad that you've joined me for this market index review video. So as we always do with a brand new week of trading, we got to take a look back and see where we are in the overall market, how things have been acting. We know that's what's going to impact how individual stocks move. So last week we saw the indices, they each gave up a little bit of ground. They continued lower from these recent highs, and we've created multiple lower highs and lower lows, and last week we made new correction lows in several of the indices, including the NASDAQ. We got down to 2961 on Friday before rebounding just enough late in the session to finish positive for the session on Friday. But for the week, this index gave up about 18 points, not real significant, but the buyers are still nowhere in sight. And in fact, if all this index can do is tumble and then essentially move somewhat sideways, that's not a real encouraging thing. On the downside, we've got Friday's low down here, 2961. We've also got this unfilled gap from early August, and that goes down to about this 2909 level. So those are the downside levels to watch. On the way back up, we're still dealing with this 3000 level. We've struggled to close above it each of the past few sessions. If we can get through there, then 3040 is going to be the next big level for the NASDAQ. For the S&P 500, this index gave up about 22 points last week, so it's down a little more than 1%. Friday it finished negative, but not by a lot, and so it's essentially trying to hold above this 1400 area. It's dealing with this 1414 zone, which we closed just about 2 points from there. Keep in mind that's been a level that's been both resistance and support for a number of months going back into the early portion of this year. If we can get through there, then we've got 1426. That's this level that we just broke down from on the way back up. Now on the downside, we've got really this 1395 is kind of the next big level. And if we happen to undercut that level, then we'll very likely see the S&P start to accelerate a little bit more as it really exits this range to the downside, which really is about a 50-point range. So we'll keep a close eye on that. For the Dow, now this is only 30 stocks, and this really carries the least amount of weight for me individually because it's just a smaller index than the others. However, it is a better known index, and really I call it kind of the Main Street index. When Joe Trader, or really Joe Investor, goes home from work, he turns on the evening news and he sees that the Dow was up 3 points, for example, on Friday, and that's the index he's most familiar with. For now, this index is sitting still beneath this range that it just recently broke down from last week, down around this 13.3 area. It has undercut that level. It's clinging above this 13,000 area. Really, we've probably got a test in store pretty soon of this 12,977 level. If we do happen to rebound here in the short term, this 13.3 is going to be the level to watch on the way back up. For the Russell, this is the small cap index. This is really the more speculative index among all these that we cover. And this index has continued to struggle. It's really just kind of been channeling its way lower of late. Now I've got a number of lines here. We are really just clinging to this uptrend line that goes back to the June low as of last week's close. Now this index gave up about 1% on the week, and it's currently just holding above this 807 area. That's where it's found support a couple of times in the past several days. On the way back up, it's been facing some recent resistance, and it's a level that we've seen before. It's right in here. This is the 820 level. And you can see how for the past week this index has twice challenged that area and been unable to finish back above it. So we'll just kind of watch these two levels here in the short term for some sense of direction for the Russell. And then one more index that I occasionally cover is the VIX. And last week we saw this index, well, the previous Friday really, is when we broke this descending trend line here around that 1625 area, and then we've held above it. So the VIX really didn't make much continual progress last week. However, it is obviously holding above this little downtrend line break, and that's after rallying off of this key support around 13.5. So this index definitely looks poised for some upside, but for now it's just kind of churning here. We'll continue to keep an eye on this. This really is the fear index. As the VIX climbs, the market tends to fall. They kind of go hand in hand. And so a low VIX really points to a lot of complacency. A high VIX, you start getting above 30, and especially above the 40 level, it's really indicative of a lot of fear and really much more related to turning points back to the upside for the market. So we'll continue to keep a close eye on the VIX as well. But one other note is simply that this hurricane in the NYC area has the potential to really diminish volume on Monday. And so keep on your toes out there, because it may feel like a holiday for those of us who are not in the NYC area. Thanks for joining me for this video. I will have more for you soon, but until then, trade like a bandit.